they might miss all of this run here because they
Right.
think the market's due for a big drop, when it's like, oh, you could have bought it about the same point, right? So that's powerful. The point I wanted to emphasize with that is this. The point is this: you don't have to go all cash. You don't have to close everything out. But if you start getting more defensive, if you tighten up put protection, maybe you sell calls on stock that you own, you tighten up puts if on stock positions that you own, you tighten up puts on a money press. If you're doing something, right, when this 50-day moving average failed, when this support level failed, okay, when that 100-day moving average failed, you could have gotten defensive right here. I'm drawing a big arrow. You could have started getting really defensive right there and missed about 1,000-point drop on the S&P 500, or at least been more protected through that 1,000-point drop. So back to whoever asked the question, how do you know? How can you time it? You can't. We didn't know it was going to fall apart like that, but you start looking for these signs of it breaking down, and you can be a little more defensive. All right, so flashback to, okay, we're getting some reps, flashback to now, and you'll probably start looking at this trend breaking down a little bit differently. If we start to see that trend, a lower low, right? We already had one lower low right here, lower low, pierced the 50, right? Little red flag, lower high. So some red flags are building. Now, could this thing turn around and go surge past 7,000 and start a new uptrend? Yes, absolutely. But if it breaks down, I want you to be ready. That 100-day moving average has become really important these last couple of days, even these last couple of weeks. Tested it here. That 100-day moving average is showing to be pretty powerful support. If that fails, that's a pretty big red flag. If that 67, 80-ish level fails, that's a pretty big red flag.